invested in that which is hated or deemed to fail. And that's where I like to be. But as you rightly point out, it has been a long period of time, and I believe that, our shareholders are going to see whether or not I'm right in the not too distant future.
Your style of investing, deep value, contrarian, concentrated, requires a high level of conviction. What's the secret to holding the course when everyone, if not everyone, lots of other people say you're sailing in the wrong direction?
Well, just because I'm contrary doesn't mean I'm right. So one of the elements is that I invest all of my money in the ideas. So I've always, from day one at Fairholme, have taken the view that I need to eat my own cooking, and I need to make it important, and it needs to be a significant business for me on its own. So I am doing what I think is right for my family, and by definition, I hope I'm doing what's right for my shareholders. And I haven't changed it in one iota since day one. I mean, at the Fairholme.
Not one.
Not really.
All right, so that was Bruce Berkowitz. He's an example of a contrarian investor, value investor. And I want to use Bruce Berkowitz to show you that, by the way, this is episode 11 of Invested Info. This is going to be called How to Value a Business, Find Stocks on Sale. And he invested in Sears for 10 years, all the way till Sears went under. Now, his calculations were correct. It was based on a valuation standpoint, the stock was trading well below its actual value. Now, the thing with that is he goes on to say that when you're right, others got to see that you're right. And over time, normally what happens is the stock price will reach its book value, or the book value will reach its stock price. So I'm going to give an example of a stock that is undervalued, and in the contrarian investor's standpoint, there's opportunity. Not saying if we're buying or not, but it's a liquid natural gas company, and the thesis is it's based in Greece, and the United States, in defiance to Turkey, wants to increase the energy to Europe from Greece instead of Turkey. So they're doing deals with Greece. This is a Greece-based liquid natural gas carrier. And we know the whole sector of different shale companies, oil companies, gas companies have been hit. So there's opportunities there. Not saying every single one is going to be undervalued, but some are going to be undervalued. And that's where we take our opportunities to buy. We buy $10 bills with $5 bills, as Warren Buffett would say. So the stock is currently trading at $3.46, right? Now, how do we value a business? Well, I want to go right here. The value of a business, or the book value per share, is the total assets of the business minus all the liabilities of the business, gives you the book value. You then take that book value and you divide it by the total shares outstanding. And the price to book ratio is going to be the current share price divided by the book value per share. So anything under 1 is a great book value. So we're going to do this. We're going to get the valuation of this company right here. Again, we're going to use Yahoo Finance, right? We're going to go to GLOP. Ticker is GLOP, GLOP, Gas-Lac Partners. As you can see, it's currently trading at $3.46. Now, if you just type in GLOP book value per share, already you'll see that they have a valuation of $11.07. So it's trading well below book value. But let's go to the quarterly. Let's look at it from a quarterly standpoint, right? So again, we go to details. We're going to go to the financials. We're going to go to the balance sheet. And I want to look at the quarterly balance sheet. So as of June, we're going to get a valuation of GLOP as of June 30th. So these, remember, on the balance sheet, it says all numbers are in thousands. So we're going to look at the total current assets. So they have 2 million, 344,802. So we're going to take that number. Let's do that. Let's do that. I'm going to go to calculator. We're going to do 2 million. What was it? 2 million 345 802, and we're going to times that by 1,000, right? We're going to get 2 billion, a little over 2 billion, right? We're going to subtract that. Let's go to the total assets, total liabilities rather, which is 1,405,951. So we're going to do 405,951 times 1,000. And that's going to give us 939,851,000. 939 million, so 931,851,000. So 939,851. 939,851,000. So that is the total book value for this company. This is what is valued right now. Now, when you look at Robinhood, they don't have that current market cap, right? They have it valued at 165 million, but it's really valued at 939,851,000. So we have to take this number and we're going to divide it as we saw in the equation by the shares outstanding. So when we GLOP, we're going to go to GLOP, current shares outstanding, and we want the most recent one for this quarter. So let's see if we could get that. No, we want the most recent one as of June. As of June. So let's see if we could find it. All right, so we have 50.25 million. So what we're gonna do is we're gonna take this number and we're gonna divide it by 50.25 million. And we get a book value per share of $18.07. $18.07 is the current value of this company. Yet the sales price is $3.46. So as you can see, as Benjamin Graham says, the market is manic depressant. In the short term, it's a voting machine, but in the long term, it's a weighing machine. And if we look at the history of it, prior to COVID, let's look at the 5-year history. Prior to COVID, it was trading at its book value of what, roughly 23, 20, 19, 18. And all of a sudden, due to COVID, stock dropped all the way down to $1.92. And I remember that. We had exposure to it at that point. Got in around $3, left at anywhere from $7 to $8 during that run up, and then no longer having exposure to it. But this is a clear example of a stock that is trading undervalued. And what's the price to book ratio? Well, we'd have to do the current sales price, which is $3.46, divided by 18.7, which is 0.18 price to book. Anything under 1 is a great investment. This thing is trading at 0.18. Now, I want to give you another example of something that is overvalued. Let's take a look at Tesla. Tesla is trading, minus, if you don't do the reverse stock split, the stock is trading at over $2,000, over $2,200. But what is the book value for Tesla? Let's look at Tesla. Book value per share of Tesla is $10.06. So here I gave you an example of a company that is trading way under its value that nobody's interested, and a company that's trading way above valuation, but everybody's interested in it because they think it's going to go up. So I remember someone said, "Why do retail investors buy stocks that are overvalued and keep going up?" Is because they don't understand what they're doing. They're just gambling. Honestly, that's the reason. So here at Invest Info, want to teach you how to be value investors. That's how Warren Buffett made all his money. That's how Charlie Munger made all his money. That's how Bill Ackman make all their money. They find companies that's heavily discounted, has a great business, has a great moat, as Warren Buffett would say, and look for the can the problem be fixed? And if it can be fixed, we look into it and say this has a chance to be a good investment. Now, the guy that I showed before, he invested in Sears and AIG because the valuations, the numbers are great. But if everyone else doesn't see those numbers, then it could be a bad investment. Okay, so I think that was a quick lesson: how to value a business, how to find undervalued stocks, and how to avoid overvalued stock. Always look at the book value per share, and you could always do your own um, analysis and evaluation on a company before you invest. That way, when the market price is like glop 346 drops to $2, drops to $1, you're happy because you got a valuation of the company at $18. Some might be 19, some might be 11, but currently based on the current data, this thing is trading way below its book value. So that was just an example of it. There's others out there, just many out there. Just when you invest, make sure you understand the thesis and why you pick this business. All right, see you on the next one.